Right, so let's begin with the preconditions of an audit. What has to be in place before we can even think of agreeing to an audit? Now, first thing is that when we're auditing something, then we need to audit it against something, and it's going to be against an acceptable financial reporting framework. We need to say, yes, that agrees with an appropriate financial framework. An appropriate financial framework will be something that the laws or the regulations of the country normally say, look, when you produce your accounts, they should be in a line with, and for us, it's IFRSs, isn't it? So make sure there's an acceptable financial reporting framework for that company in that country, and that's normally going to be something like IFRSs. So once we know that the accounts are set using IFRSs or some acceptable framework, we think, right, okay, fine, we've now got something to audit against. Now, the people who are creating the accounts, the financial statements, they're the management. So we've got to make sure that they at least know what they ought to be doing before we can take on the job. So management must acknowledge the responsibility for three things. Okay, so they must acknowledge and understand their responsibility for preparing the financial statements. And they're preparing those financial statements in accordance with an acceptable financial framework. They must also acknowledge their responsibility for making sure that they set up the internal controls that are good enough to ensure that the financial statements are free from material misstatement, either due to error or fraud. Okay, so as much as they can. So an acceptable financial reporting framework, IFRSs. Then management must prepare them in accordance with that. They must prepare them in a way that they've got internal controls that make sure there's no material misstatement, material misstatement, big misstatement. And finally, they must make sure that, or they agree that we can get access to all the books and records, unrestricted access, so we can get our evidence to give an opinion. So they're the four things that are the preconditions of an audit.